I just used technical analysis to predict the Iran conflict. And yes, I'm dead serious. What if I told you that technical analysis can predict the future? What if I told you that stocks speak in a language, a code, that can be deciphered into making high probability trades? First off, none of this is financial advice. Everything presented in this video is for educational and illustrative purposes only. Do your own research and make your own investment decisions. That being said, let me show you exactly what I'm talking about. It all started when I was analyzing US rare earth and critical mineral stocks on Friday. I've been a big fan of this trade fundamentally as a result of the current trade war with China, so I started diving into a few different stock charts on Friday afternoon. The two specific charts I was personally looking at were United States Antimony and Energy Fuels. Both of these companies are major players in domestic critical mineral and rare earths, and I've been watching the stock charts very carefully. Based on a handful of technical indicators and signals, I concluded that they were ready to break out. So here I have the chart of United States Antimony. I noticed that this pattern is starting to look like it might break out. This consolidation, bullish consolidation pattern is known as a descending wedge. It's when the price goes up, went up really high, almost parabolic in October, and then it starts to consolidate that move or retrace to a healthy level. And you can measure that retracement or that consolidation through these stock patterns. They are very well respected. You also can use moving averages, like the 50-day moving average I have on the screen, or the 200-day moving average, which is just another good longer-term one, or even the 100-day moving average, which I have on the screen here. But I'll actually get rid of the 100 because I don't think we need that. You can see the 200-day moving average acted as a great support level down here, and the 50-day moving average acted as a great support level right here on the shorter time frame. And you have the momentum starting to turn positive. All of this coupled with the fact that we are retracing these moves at a golden Fibonacci ratio. Let me get rid of these non-golden ratio lines. But this is the golden ratio. So from this bottom to this rejection high here, we retraced perfectly to the confluence of the golden ratio, the 50-day moving average, and this descending wedge pattern. So we have a confluence, which is where you have the meeting of a bunch of different positive things together right here at that $7 level. And the momentum is turning positive, and that's a key sign. Now I go over to Energy Fuels. Oh, I have it on the screen here. And I also see a very positive technical pattern. Right? We have this is called a cup and handle pattern formation, where you have a high, and then you come down here to lower. The basing period, it's kind of like a rounded bottom, like a cup. It comes back up, retests the previous high, and then it does a descending wedge, like what I just showed you with United States Antimony, down here, which, if you look, it's breaking out, essentially, right? So we're getting the breakout, we're getting the retest of the breakout, we've got the 50-day moving average here, and we even got a perfect touch of the golden Fibonacci ratio. You can't make this stuff up, guys. So Energy Fuels and United States Antimony both look super bullish to me, and I noticed this on Friday afternoon. But then when I go to Alibaba, just looking at BABA immediately, you might not think it's a bearish chart. You have these descending wedges break out here in January, and another one here has not broken out. But you have this support of the 200-day moving average, which in theory should be a good level of support. And believe it or not, start the move, you're right at that golden Fibonacci level, guys. And it's the confluence of the 200-day moving average. This would ideally be a perfect support level. Actually, and if you zoom out, previous highs right here structurally also offer support. But under the hood, it actually looks pretty bad, guys. The volume's declining down here. And then I'll pull up that moving average divergence, convergence divergence indicator like I just looked at with UAMY, where it was going positive on the support level, and it just looks totally negative, getting worse. You look at these red histograms down here, they're actually getting bigger, so the sailing off is getting stronger. And we actually closed below that 200-day moving average and below that golden Fibonacci level. So Alibaba was looking weak, and the first thing I thought to myself is, oh my God, Trump's gonna put a bunch of tariffs on China or something. That's why the rare earth and critical mineral stocks are starting to break out. And that's why Alibaba looks so weak. But then I was looking at another stock that I really like, Red Cat Holdings, which is actually a military drone company. And it looks very similar to the Energy Fuels stock chart. You have the cup and handle pattern forming here. Top of the cup, bottom of the cup, basing period, rounded bottom, back to the top of the cup, and then you have a descending wedge, breakout, and retest. Right at the 50-day moving average as well. Is there a golden Fibonacci in there? Just for fun, let's see. Pretty darn close. I'll take it. Maybe the 50-day moving average lifted it back up. Momentum hasn't turned positive, but the chart looks pretty good in my opinion, just objectively with the cup and handle formation. Obviously, momentum is going to be on the weaker side since we've come down. But if you think about the confluence of these things, it looks pretty positive in the short term. And then, if you go to oil, ExxonMobil will use as a proxy. This one's not too hard to look at, guys. It looks pretty positive to even the untrained eye, I would say, right? This broadening wedge breakout, momentum starting to turn, was actually negative during this basing period. But the wedge breakout and the turning of the momentum, the big green volume spike, big breakout. So why are all these things breaking out and BABA breaking down? Well, in the moment, I thought, well, at first I thought maybe tariff framework, who knows? And then I actually had a friend DM me, good friend of mine, follow him on X if you can, Stonk Surfing. He DM'd me and he said, any opinion on the Trump Xi talks? If you don't know, Xi is Xi Jinping of China. He's their leader there. Coming up, I pulled out of most of my mineral stocks because I thought they might trend down going into that. I'm really bullish on UAMY, like I think you are, but I feel like there might be a lower entry around there. It sold off hard last year around their talks in the 1-year deal. Also, like your cup and handle call on UUUU, Energy Fuels, but waiting to re-enter for the same reason. UAMY, USAR, and UUUU are my top 3 for mineral codes, and I think they're the highest quality. I said, great question. That will likely be a catalyst or high volatility event for mineral stocks. Just putting on my politics hat for a second, if the US bombs Iran ahead of the Trump-Xi meeting, they will likely be adding fuel to the current trade war fire, and domestic mineral stocks will probably soar. It's funny how you bring up China, because I was coincidentally charting BABA today. I think it looks pretty bad. All of the mineral stocks, including USAR, UAMY, UUUU, and MP, are fantastic setups. I actually have a feeling this weekend something will happen. And I point to UAMY, the positive technicals. See how even though UAMY price action has been getting tighter, the technicals look like they are improving? It is the exact opposite for Alibaba. As the price has coiled very tightly, the technicals are actually getting worse. This is because of China's alliance with Iran, with reference to why I think it will affect them. And I showed them the Polymarket odds, where there was more than a coin flip. We would strike Iran within the next 2 weeks. He said, absolutely agree. Trump is going to hit Iran before their meeting and probably this weekend. I just don't think that materially changes anything that Trump is going to ask for when they meet. He knows China has us by the balls with minerals, and I think he's going to let them have Taiwan in exchange for good trade relations. Also really like these chart setups, by the way. Just don't like the macro timing. I told him charts gave me a powerful level of confidence despite the uncertainty. Now, if we want to go even deeper down the rabbit hole of Fibonacci's, know that they don't just retrace in terms of price. They don't just extend in terms of price. They also, in terms of time. They're called time fractals. It's the pivot from the high to the low to the high. Those are what fractals are, Fibonacci fractals, the inflection points. From the very high of UAMY, around $20 in October, to the December low, it took 65 days. It took an additional 40 days from the December low to that rejection point in our wedge. And guess what 40 divided by 65 is? The golden Fibonacci ratio. I'm not making this, guys, up. If you want to really go dive into the charts, you can go find this out yourself, but I'm just presenting you what I've discovered. And now, if you go from the top of the wedge to where I believe was the new bottom of support, it was 22 days. If you multiply 22 by the golden Fibonacci ratio of 0.618, you get about 2 weeks. And so from that, I was projecting a March 3rd breakout. So that would be Tuesday. It could happen, I guess, tomorrow on Monday. But I just wanted to show you guys the Fibonacci numbers are pointing to the breakout here. And I saw this before it came out. This was 3 days ago, February 26th, 2:11 p.m. I didn't know about the Iran strike when I posted this. So that's why I'm presenting you guys with all this information. I don't I don't know for sure what's going to happen, but the charts are pointing us in this direction of a breakout, and we have to listen to them. That's why technical analysis is so beautiful. It really shows you how efficient markets can predict the future or future outcomes before they become reality. So with that, I'm going to end the video, but I hope you guys enjoyed it. Let me know if you want to see more info on technical analysis, more walkthroughs. If you have any stocks you want me to run through or sectors you want me to expand on, please let me know in the comments below. Thank you, and have a good one.